Welcome to Java. Thank you kindly for joining me. It's November 11th, 2024. It is also Monday, as well as being Veterans Day in the United States of America. So I would like to uh, express my extreme gratitude to all of the veterans that are out there and all that you have done for us. So thank you all very kindly. Also, what does this mean to the markets? Well, the markets are open, the bond markets are closed. So we will not see much on the 10-year yield today, so there will not be any movement. However, the markets will be in full swing. So let's get started with our favorite risk indicator, the MMRI. Now, currently it's 281.9, is still rising. Risk going up as there are more retailers still pulling into the market. We're very definitely into the greed zone at 61. Spoke about this a little bit yesterday, but we're really watching the rate at which this will rise. So again, the bond market closed. The 10-year yield at 4.31 won't move today. But what we are watching is an accelerated increase in strength in the dollar. So I have added here between not just the dollar, but also the euro. They're almost on parity, which is very interesting factor. And there's some speculation that they will end on parity prior to the end of the year. What does that mean? At the moment, relative strength of the euro getting crushed. This is in between a few factors. First off, there is a lot of political turmoil going on. Secondly, it is on a major, if you can imagine, a flow that goes between the currencies. Now, I was watching this last night because there is major shift going on again between the currencies. Now, not so much normally between the dollar and the euro because the central banks stay in collaboration and move together. So I'll talk about that a little bit more in a moment. But what this is doing as a result is basically an inflationary play in the long run. So we've got cryptocurrencies skyrocketing. We've got Bitcoin again at an all-time high above 82,000 as I'm doing this. So with this, it's also rising Ethereum as well as XRP and Dogecoin, mostly because of Elon Musk and the whole Tesla play with the new elections that have come in. Now, with this, I would like to talk a little bit about oil, Brent extending losses on China outlook. Now, this is jumping over to oil and why it is dropping. So we've got crude coming down below 70 right now, but it's lower demand outlook. So this is kind of showing a recession on the horizon. This is going to be watched very closely. But secondly, it is also along with the Chinese yuan having issues. I spoke about this yesterday again. China just did a lot of quantitative easing. They are flooding their market with loans, trying to prop up their market, and it isn't working. So they're still having issues with that. We've also got Japan having serious issues with their inflation rearing its ugly head again. So what does this mean? Between all of these, we've got escalating currency war, and it is escalating rapidly. So we've got the euro, and I've put down here European markets this morning are booming in the green. Now, with the euro dropping, as the currency drops, the market jumps. So, what does this mean with the dollar is beginning to pull back. At the moment, we've got the United States stock market in the green, gold and oil under a bit of pressure as their risk of securities are just going crazy here for the moment. We've also got the futures saying that it is risk on environment. Put your money into stocks, and that's why we're seeing this greed jump. Now, in the back of this is, I believe, an inflation play for the long run with the prices that will increase. But this jump in the markets is temporary. Now, they are poised for a bit of a pullback today, although possibly later or even tomorrow, because right now futures are also saying green, at least for the open, is what's most likely. Now, caution on that. Watching gold and silver are telling the tale behind it all as we are watching the currencies. Now, I know most people out here don't trade the currencies, but watching this dynamic with the euro and the European market will tell what is going to happen in the United States market, give a clue. So with this bond market close today, we've also got light volume in trading. That means, again, light volume could be rapid moves and much more volatile. So with this, we've got dampening corporate mood and rising bankruptcies are clouding Bank of Japan's rate hike path. So as I was saying, Bank of Japan, the yen, if they feel like they have to protect their currency, protect their economy, depending on what they do, they will be looking at hiking again. Now, if they do hike, that will basically hurt United States markets as well as their currency will strengthen. So we've got the calendar coming forward of the earnings here. We've got quite a few coming out. This is Monday prior to market open after the close, and this is Tuesday prior to market open in case you see anything or in any trades that you would like to adjust prior to the earnings coming out. Now we've got our favorite guy here again, Fed Chair Powell. Inflation worry seeping back into the United States bond market. The new election helping to drive up what they're calling break-evens. Now, we've got a lot of major distortions that have just happened, lots of record highs that have just happened this past week, past couple of days, really, and as far as the market being open, and there's got to be a little bit of a correction there. So this guy coming out and cutting rates along with the inflationary trade markets are in a good spot. They could have a bit of a pullback, but they're still continuing at the moment. We had Musk coming out, reposting a call to end the US Federal Reserve Bank. There is movement kind of gaining in strength to head towards this because central banks are not any part of the government. They are not official. It is simply a coalition of the 12 largest banks in the United States that have taken it upon themselves to drive the financial workings, the underpinning systems in the United States fiat currency system, as well as around the world. Now, their constant printing is the reason for all of the inflation that we're seeing globally. I think also, this is a personal opinion, that the policies of the incoming president is squeezing the other countries around the world globally. So they will experience the inflation first. That is temporarily boosting American markets and American goods, if you will, services, jobs, and economy, but it's not going to last. The inflation will come in sooner or later. So, as I had said before, the smaller banks will get crushed out or merged. And with this, we've got another Michigan credit union getting a second bank deal in Florida. This is just another example. It is their 20th credit union bank merger of the year, again setting a record. So, new record for banks being merged or closing for this year. So we've also got futures rising, stock market up, CPI coming in this week, core inflationary numbers, and Bitcoin moving at record highs. So everything that's moving in here basically is the currency looking for yield, looking for places to go to where it can make more money than just sitting in a safe. I think this is a temporary trade at best. So we've got Southwest Airlines to issue voluntary separation packages to alleviate overstaffing. Again, jobs. So jobs coming down, inflation still continuing at a rapid pace. The economy really, in layman's terms, for the day-to-day, real life, Main Street, as you call it, is hurting. So with this, we do have literally a bright spot, if you'll pardon the pun, and that is energy. So we've got President-elect talking about building nuclear power plants and that uranium is the trade of the decade. So if you are looking to get into energy, look closely at the uranium markets, energy. There's going to be a shift in a large number of trades here as alliances are also exchanged now. Liquid natural gas is always a difficult one to trade, but we are watching oil being going down right now on demand, but they're looking at alternatives, uranium being the top one. So we have also got Bitcoin again. They're saying there's no overvaluation concerns among investors, that it's likely to go up even further. I think this is biased toward the asset. And as a trader, you always have to look at the risk, what the charts say, and how things are going. And at the moment, it looks as if it is beginning to hit resistance areas. It is off the charts, new territory, so a little bit difficult to tell from here. However, the trades, I would urge caution, could go up. We don't know, nobody knows, but just looking at it has had a massive move. And I do like Bitcoin, but this has been, I believe, an overextended move. Temporarily, will continue later, but for now, caution. We've also got Doge going up. As I was saying, this is mostly on the Elon Musk new department coming up. So that's given a boost to that one as people are putting their money into that. So with cryptocurrencies gaining all of these different areas, rising tide with all ships, MicroStrategy owns a large number of Bitcoin. So their portfolio is now worth over $20 billion. Return on investment is now over 100%. So they have basically doubled their money for everything that they have put in. They are well over their buy-in mark. A couple of other things I would like to talk about. The first is going back to Europe, talking about they're secretly preparing for a renewed gold standard. I think this is a bit of a push. I don't think they're preparing for a new gold standard exactly, which means that you could exchange whatever currency you have for physical gold. I think rather it's going to be pegged to the value of gold as a basket of commodities, very similar to what is happening with the BRICS. Now, the euro, as I was just saying earlier, plummeting, they do need to bolster this one way or another. And one of the things that has put the euro in this position is all of the funding for the wars. Now, we've got this story over here, Zelensky afraid the war will end. And this is because it is a major cash cow for him, not just for funding the war, but a lot of it goes elsewhere, funneled into the top pockets first, and then it goes down to whatever use they say that it is. So with this, we've got some major shifts in the market. As I said, watch the volume. Relative strength of the dollar could be volatile moves. I wish you all a green trading day, and until I see you again, stay free.